Hello and welcome to episode 77 of
Mo Money,
the Investing Economics Show for Millennials by a Millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, your host, MC Mo. Now let's get to the money. This week we're going to be talking about another psychological aspect of investing. This time we're going to be talking about when should you start investing. Now there's a difference between saving for retirement and investing for retirement. If you put cash into a savings account or you simply put money into a retirement account without investing in anything, you're not really doing anything more than slowly losing money because of inflation. The only way to save for the retirement that you are hoping for is to invest. The question is, when is the right time that you should invest? For instance, imagine it's October 8th, 2007, and you're 25 years old. You've worked hard and saved $10,000 to start investing towards retirement. And that day you invested all in S&P 500 ETFs. Within 6 months of that investment, you're down 11%. Within a year, you're down 40%. That's just bad luck. Nothing you could have done different. You cannot know if today, tomorrow, or next year is going to be the day that the stock market decides to start its descent into chaos. So the first rule to remember of when do I invest is do not try to time the market. Nobody can do it. Warren Buffett can't do it. No trading gurus that you see on Twitter or Instagram can do it. I can't do it, and you can't do it. There may be some investors who have had a good run of a few years of making the right trades at the right time, but that is just all luck. It's all coincidence. Eventually it'll all blow up in their face if they keep thinking that they have this magic timing touch. The second rule is stop with all of your excuses. Everybody comes up with excuses to not want to make an investment. Oh, I'm waiting until after I get my taxes back. I'm waiting for Trump's trade war to end. Oh, it just doesn't seem like the right time right now to make this investment. There are some legitimate reasons to not invest, like you don't have the money, but 95% of the other reasons are just bullshit that you make up in your head. Until you realize that fact and stop listening to everyone else's pessimism about the markets or about a certain stock, will you be ready to start investing? The third rule of when do I invest is to realize the time frame. I suspect that most people watching this are around my age, 20 to 35, which means that you have 30 to 40 years of investing ahead of you. That is a long time in terms of investing years. And in those years, there will be a lot of capital gains and a lot of compound interest. So the person who is in the game longer is going to have a better chance of having a better return when they decide to finally retire. Maybe investing tomorrow versus next week is not that big of a deal, but holding off for a year or two is going to make a big difference in the long run. The fourth rule of when do I invest is research, review, and pull the trigger. I could tell you that anytime the market is open is the best time to invest, but that's as equally stupid as saying you can time the market. It's important for you to do the research. If you find a stock that you like or you find an ETF, a mutual fund, whatever investment it may be, go ahead and buy it. Do not wait for it to hit a certain price. Don't wait for earnings or the release of their new product. Just buy it today. If you did the research and you think it's a winner, buy it. Like the great Emperor Napoleon said, take time to deliberate, but when the time for action comes, stop thinking and go. Example from the beginning about investing at the top of the market and then losing 40% in a year is an extreme example, a once-in-a-lifetime thing. The chances of that happening are very unlikely. But if that person had held on to that investment and not sold, they would be up 83% right now in just 10 years, which is about 8% a year, which is a phenomenal return. Popular financial advisor Josh Brown said a few months back, anyone 35 years old and younger should be hoping for the market to go down 40% again. And he is absolutely right. If that happened, we'd be able to buy stocks, securities, and other investments at much cheaper prices, which would help our generation build wealth. But what he did not say is sit around, twiddle your thumbs, and just wait until that happens. A downturn in the market could be coming tomorrow, next month, or in 5 years, but you should be starting investing now. If and when a downturn arises, you'll handle it then. But for now, it's time to get started building for your future. Don't be that scared person shuffling outside of the double dutch, too afraid to jump in. You just have to do what's best for you and jump in and take everything as it comes at you. If you have the money, but just haven't started investing it yet, don't panic. there's still plenty of time to jump aboard. So stop with whatever excuses you have before you miss the boat. Thank you so much for watching another episode. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, and share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook.
Mo Money, signing out.